Welcome to the other side of the coin, where we add new perspectives for you to make more powerful decisions in your financial world. Today's guest is one of my partners, Zack Pumerantz. Starting his career in the risk management space, Zack has always had an affinity for financial planning. Even before joining I Am Financial, I always appreciated his deep knowledge on investing. Not only does he focus on the growth side of planning, he also understands how to manage risk and lift the floor. In today's episode, Zack will dive into the depths of investing and provide great insight on strengthening systems and your mindset around money. Without further ado, it is my pleasure to introduce I Am Financial's Director of Investments, Zack Pumerantz.
Welcome to the Other Side of the Coin podcast, my friend.
Happy to be here.
Well, I'm pumped to get into Stoic philosophy with you. We've had many conversations that weren't recorded that revolved around Stoic philosophy and probably some conversations around finances. So I'm excited to merge both of those things together. And at the top of this show, we always start by asking ZP, what was your relationship with finances when you were growing up?
Yeah, so I grew up, fairly comfortable, with money and understanding kind of, what it does for us and the type of relationship we want to have with it. But it was really my grandfather who, taught me very young. He managed his own finances and really for the family advised on a lot of things. So he gave me kind of a comfort early on in terms of how he thought about money and really how to do things in an effective way. Kind of build wealth slowly, right? I think, getting quick rich takes luck, and, building wealth actually takes discipline, and commitment and an education and understanding of it. And I grew up seeing how uncomfortable money made a lot of people, right? In terms of even their own understanding of it and what they wanted to do. So, having that comfortability and then taking a passion in it myself, felt like I could really actually help people in an area where I think a lot of, it brings a lot of stress. So that always felt very comforting to me and somewhere where I could really give back and grow from there.
Mm-hmm. Yeah, and I'll even throw in that Zack Pumerantz, he's one of the most passionate people I know in finances. Before he was even an advisor, he was doing so much work just on the side, and he was writing his own blog. I've never seen somebody who wasn't in finance professionally take such a passionate approach towards finances and educating other people on finances. It was pretty interesting to see. It was pretty cool.
Yeah, I love that. And something that Zack Pumerantz, that you've really taken to is really the philosophy around, or maybe the mindset around money. And and around finances. There's a quote at the bottom of your email signature. I have it written down right here. And this will be a nice on-ramp, I think, into what Stoic philosophy is. You have power over your mind, not outside events. Realize this and you will find strength. And this is by one of the great Stoic philosophers, Marcus Aurelius. So I'm wondering if you could just explain a little bit about what Stoic philosophy is, what is Stoicism, and from there we can maybe talk about how it overlays well with your approach in the financial world.
It's interesting. I think people think of finances as purely maybe a math or a money game. But there's so much behavior behind it. In fact, I feel like more than half the battle is behavior and emotions and that type of thing. So as I grew up and started to really read more about it and understand myself and then learn from other people who maybe I was helping or working with or trying to create plans with, it became clear that emotions are the driving factor behind most. I think there's even a stat that the average investor return it barely beats inflation, whereas the indexes that we can just match, at a low cost, those will be much higher. And you have to ask the question why. And it's because people, react emotionally to things, especially when they're scared or when there really isn't a strong kind of fundamental or foundation of a house that, in their world. And so Stoicism is really, it's the idea of of developing self-control and fortitude to overcome destructive emotions, right? So what that means is basically, a lot of us are driven by our emotions. And I think this philosophy and the idea why it really resonates is because it teaches us how to understand what we can and can't control, the dichotomy of control, and then how to actually, dedicate ourselves to being virtuous, to, tempering ourselves, to having resiliency during tough times. There's this natural tendency for people to love when things are going well, but not prepare for the worst. And that doesn't mean we need to sit here and worry about the worst, which we all do, of course. But the idea is, how do we build an environment where we can handle the worst? I specifically come from a risk management background of building fraud prevention teams. So I think that fit really well to Zach's point, when I was, working with people to help them with understanding their own plans, just for fun, because I loved it. It really fit into what I actually did for a day job too, because it comes from a place of risk management, right? We gotta build this in a way where we can't fail. And I think that is something that it's underappreciated, right? But if we can build that, not only does it help us from a stress perspective, but it also allows us to be more aggressive in other ways, right? And there's kind of this glass house environment where people think, how can I, get the best rate of return? How can I do all these things that seem nice on paper, but not actually build a plan that's resilient, flexible, and makes us feel good, right? And actually gives us confidence. So that's how I want to fit Stoicism into what we do, which is, let's think about the things we can and cannot control, and let's build in that way of understanding the limitations and how we want, and the flexibility, and making sure that our plans can withstand anything, but also drive us to be committed and disciplined within that, so that when things do happen, we don't react emotionally and kind of, just wreck that plan, right? So that's kind of the way we want to start from a mindset.
So you guys ready for this? You're gonna be really excited that I was able to weave this into our podcast together. So I want to double click. Yeah, I'm gonna double click
Yes.
on dichotomy of control. And I have a sense for what's in our control, what's not in our control. A really obvious example in everyday life would be the weather or traffic, something like that. So when it comes to financial planning, if you could either or both explain a little bit more just generally, what is the dichotomy of control, and how do you use that as a map or a lens in specifically around strategy in financial planning? What are you helping people identify that is in their control? What are some things that you are maybe educating people on, but that are out of their control? I know it's a mouthful, but.
No, absolutely. When I first speak to people about finance, when I'm meeting people for the first time, sometimes we don't even talk finance. We might spend time on just philosophy and understanding and mindset. Really, mindset's a big thing. Because people say a lot of things of what they want or what they're doing, but their actions don't always align with that, right? So it's good to understand what exactly is going on, right, in their world, and how do we start to separate things so that it's very clear for them, right? Because I think people look at things, especially when it comes to money, it's a big cloud of all these different terms and all these different options and things I should be doing, things I shouldn't. And that can be very overwhelming. It can be confusing. Prioritization is an issue. So I like to start to create separation there. And so what that kind of comes with is, when it comes to things we can control, that's down to things like saving, spending, investing in a diversified way, doing things where we're not making predictions, we're just preparing, and we're maximizing things we can control. So, I mean, just to even prioritize that little bucket right there, saving is something that is, sounds great on paper, and people all say they want to save, but how do we actually build a system for that? Because really what it comes down to is, we're all, most of us are unconscious spenders, right? We have our direct deposits going into checking accounts, we spend from there. How do we create a system that ensures that the growth of our money and income changes over time and bonuses and whatever comes in people's lives isn't automatically spent, doesn't go to a place where it just blends with everything and is spent. On the flip side, we can't, as you mentioned, the weather, we can't control market volatility. We can't control economic downturns. We can't control unforeseen risks in our own life, right? Costs that might come from that. So the idea is separating these two things and then understanding how can we maximize the things we can control to prepare for the things we can't. And we want to end up with an environment where we have uncorrelated balance. So, you know, we have assets that are uncorrelated. We have, systems that work with each other, not in isolation, right? There are a lot of things that people do in their lives that are really, there's a lot of good things that they're doing, right? In specific isolated silos, but how do we get the whole thing to work together and build really a holistic strategy? It really comes back to being able to see clearly your whole world and then strategizing and building systems within each one that then talk to each other. And then our team being able to help you, ensure efficiency across the whole ecosystem that you have going on. And so much of this starts with even just seeing it clearly. And then from there, all the advanced strategy and all the things that go beyond that, that comes next.
Yeah, and I'll even add to that. I think it's so interesting talking about controllables. Just because everybody's doing something, right? Just because the masses are following the same idea doesn't always make it the most sensible or logical, doesn't always make it the most intelligent approach. And something that we talk about all the time in our office is how the most valuable resource that somebody has is their income. That's like the first domino of the rest of the financial plan, right? It's your income and how you manage your income. And it's something that we see, way above 90% of the time. We're talking, north of 95% of the time is most people make an income from work. And then to Zach's point, he kind of alluded to this, it's getting direct deposited into their checking account. We actually call your checking account your spending account. When money goes into your checking account, what do? You spend it, right? So if you think about it from a rate of savings perspective, the most dangerous account that we have as Americans is our spending account, because that's when money leaves you and goes elsewhere rather than you saving it for yourself and your future and your family or your business, right? So the setup, kind of like the American default setup that people have, that's right out of the gate the first thing that we have to diffuse, because we have our most valuable resource, our income, being direct deposited into our most dangerous, worst account, our checking account or our spending account. So to Zach's point about creating systems and environments for people to be successful in, one of the very first things that we do, and it moves the needle immediately for people, is let's just create that separation. Why have our best asset, our most valuable resource, go into the worst spot? What if we could redirect that into a stronger location? Now at least your house, at least the system that you're building, at least now you have a strong foundation, right? Just even before we get started with everything else. But, that's kind of just like a freebie for those who are listening. Most people don't even have the foundation built correctly of the entire house, of everything else. So all these little incremental changes, they really do start adding up.
It's why the cash flow is the foundation of the house, right? If I don't care how your investments do, I don't care how all these other things do. If your cash flow isn't strong, it doesn't matter, right? And I think just to add to Zach's point, because it's a great point, is another stoic, approach is to challenge our own assumptions and temptations constantly. And I think as a society, we don't do that enough, because it's easier just to take what we've been told and just default to that forever. But if we can look a little deeper, we can see how effective something, slight changes here and there can really be.
Yeah. And Mike, first of all, you're going to have to cut us off because Zach and I can go back and forth all day. It's like a ping pong match, but I do want to just add to it very quickly. So many people, they're planning their finances kind of at the seat of their pants, right? Maybe they don't even have a good system. Maybe they just build an Excel. Maybe they don't do anything. You build an Excel to manage your finances. You say you're going to check it. Like Zach said, people have great goals and, great potential of how they want to create their reality, but are the actions that they're actually taking aligning with the results that they want, or are they taking actions that are going to fall short of the outcomes that they want, right? So, it's really interesting. Some people, they take this Excel approach and they say, oh, I'm going to revisit it every month. Meanwhile, the numbers are moving every day. And then they miss a couple of months, right? Maybe 6 months go by and they don't even look at it. So, it's really important to make certain that you're looking at this often. And you don't want to be flying at the seat of your pants, because so often people, and we all know this to be true, people make emotional decisions and then they rationalize it after. And what we see in finances is people are being led by their emotions, which we know is the opposite of what people should be doing when it comes to their finances. And I hope that I am citing this correctly. It's just a very interesting study that I've read years and years and years ago. I haven't thought about it in a long time, actually. I believe it's from the Stanford School of Medicine. And they actually took brain scans of 4 different people. One of somebody who made a lot of money, one of somebody who lost a lot of money, one of somebody on cocaine, and one of somebody who was clinically depressed. And what's really interesting, just for, like Zach said, we should be challenging ourselves, for us to think about, is the person who made a lot of money, the brain scan was very comparable to the person on cocaine. Like, that's how much dopamine, or, the lack of a better term, I don't know exactly what's happening in the brain, but that's how much dopamine, that's how many chemicals are being released in our brain when we're making a lot of money. And the person who was clinically depressed, the brain scans were very similar to the person who just lost a lot of money. The reason I'm sharing all that is for everybody to self-reflect and think about, when we are making decisions, what state is our brain in when we're making those decisions? So it really is important to take a step back, be unemotional, and usually working with a coach or, a consultant or a mentor, they can give that unbiased unbiased perspective. And it's really important. It really is valuable to have an unemotional person in your corner.
And not to get the last word, but you knew I was going to get it, is Zach and I have been talking forever about, I mean, day one, we talked about this, where intellectually everyone understands, buy low and sell high, just to, again, keep it to the market, right? But we behave the opposite, because to Zach's point, we're reacting emotionally. And if you feel a certain way when, we're going through an economic downturn, we're going to react that way. Whereas, we're going to go back in when it feels safe, right? And this is where, again, cash flow, a strong cash flow and systems can kind of build a higher floor of our resilience to not act that way, right? And to actually stay committed to our plan.
All right. So lots of things, because I mean it's hard to get a word in edgewise. So it's been building up over. It's been building up over here. I have so many things that I need to say now. No, so one thing that's coming up for me, what you're sharing really reminds me of the James Clear. I think it's the James Clear quote that you don't rise to the level of your goals, you fall to the level of your systems, and that has been in the first 18 minutes or so here that's really been echoed. So I think that brings everything that's been shared so far together. I wanted to, Zack Pumerantz, I wanted to check with you the uncorrelated balances, just as like a technical term, if you could just briefly explain what that means, and then I have another place that I want to go after that.
For sure. So I think a really good example to talk about that is uncorrelated balance. Basically, in our world, means, do you have an environment with assets that don't go in tandem, right? That are not, they kind of don't go up together, they don't go down together, but they go in different ways. And the reason that's important is because, let me use a real life example. There's what we call traditional, planning for retirement, which really comes down to something that is known as the 4% rule. So it's, I have my 401k, I have my retirement investment account. I'm going to get to a place where I feel like it's enough to retire, whatever number that might be in someone's mind, or wherever they're supposed to be. And they figure, if I can withdraw 4%, or I can withdraw the interest, for the rest of my life, that will last me through retirement. And when you are in a linear bucket like that, so my only exposure is to the public stock market, for example, again, just an example of different ways, I'm going to use that one bucket to then fund my retirement, right? So there's asset accumulation, I get to retirement, and now I have to distribute my assets as an income. And the market might average whatever it averages over the 100 years, 8 to 10%, maybe higher, right, depending on what market we're talking about. But it doesn't have that return every year. And so what that means is that when I get to retirement and I start withdrawing a fixed percentage, when the market goes up, it'll work. But when it goes down, I start to double dip on a losing asset. And two things happen. One, I run out of money, right? Or two, I'm so afraid of using it that I don't spend it. And then I end up living down in retirement, which is what we see a lot. You know, this is a big thing that goes on where retirement plans fail because people don't really have an efficient strategy for it. And instead, they kind of look to just withdraw that interest and hope it lasts them. So the idea is that with uncorrelated balance in an environment where I have a lot of different things, you know, and that can be even things like real estate or different asset classes. Again, there's a whole kind of plethora of things we could go through, but it's really creating different buckets for you to fund your retirement, just to stick to the retirement example, right? And using different buckets without going too deep into the weeds of a strategy, if I can create buckets, one of a guaranteed stream of income, one of a growth, one of something that's uncorrelated from the growth, that allows me to ensure that I don't run out of money because I'm never pulling from a losing asset. And so the worst thing we can do, I mean, in the investment world, you know, compound interest is something that should never be interrupted, as Charlie Munger said, right? And so the idea is ideally, I never want to touch the investments if we can let them grow as much as possible. But obviously, that's not the reality. So, but the reality is that I don't want to pull from something that's down. So when 2020 or you know, in 2008, right, when the market starts going down like that, we can't let retirement plans fail. And if all we're doing is pulling from that same asset, there's a higher likelihood of failure, right? And so we need to create an environment where we have things that are uncorrelated in a strategic way to ensure that we're never pulling from something that's down, and we always have options. And that always depends on the person, what they've got going on, you know, different streams there. But high level, that's the idea of uncorrelated balance.
Yeah, and it gives that down account time to come up again, right? Just real quick 2-second example. I always like to point out how a negative is more impactful on your finances than a positive. If you have $100 and you lose 50%, now you have $50, and then you gain 50%, you're only at $75. You lost 50, you gained 50, but you're down $25, right? And it works both ways, right? If you have $100 and it goes up 50%, you're at 150, you lose 50%, you're back down to the $75. So a negative is always going to have more of an impact than a positive, which means you have to earn much more than you lost to get back to even. And the reason I'm mentioning this is just to further Zach's point. Now imagine you're also taking money out as income of that down account. You're just never going to make it back to even. So that's the importance of having this uncorrelated balance. It gives you the permission to pull money or income, whatever you need, from an area that is being unaffected, you know, like Zach said, whether it's stocks or real estate or business markets or, you know, alternative investments, whatever it is, you have that flexibility and that optionality, which everybody wants, that you can be taking the funds that you need from the best possible location, essentially, you know, at all times, right? In a much stronger way than somebody else who doesn't have uncorrelated balance.
Mm-hmm. This feels like a good segue. So there's an application of Stoicism that was highlighted in our preparation here around negative visualization, which is a term that I imagine most people who are in the finance world have probably not heard before, at least in the finance world. So what is this application of Stoicism? What is a negative visualization? How do you use it as a tool?
Yeah, that's a great question. It's similar to, I'll actually go back to the start, which is it's almost taking the risk management lens to start, which is instead of just sitting here and thinking everything's going to be rosy forever, let's sit here and wonder how we prepare for the worst things, right? And it's uncomfortable. It's even, just to keep it in the philosophy realm, it's almost a meditation of how do I sit with the most uncomfortable things that can possibly happen and make sure that our plan can handle that. So
It almost
you know,
sounds like reverse engineering the way you're describing it.
right, exactly. We've said that, we reverse engineer the way people think about finances. Really, is because it's easy. Listen, when everything's going well, it's easy to just sit back and feel great, right? But that's almost inappropriate from a financial planning aspect in terms of understanding how to make sure that we can handle anything. And the way to do that is to, envision potential setbacks, job loss, market crash, whatever it might be. There's a variety of things, and they're always unique to people's lives, but handling those things are key. So it really takes us being mindful and thinking about those things and stress testing our plan, so to speak.
It's really interesting. This bringing up an example of an elite athlete, one of the most of all time, Michael Phelps, who in a different way used negative visualizations to envision what were the different obstacles that he was going to face as he went through a race. Because there's a lot of talk that's given to positive visualization and envisioning what's the best possible outcome. And I think there's something really useful about that too. But when it comes to finances or performance, really in a lot of different areas, when you can prepare yourself for what are the challenges, even if it's not the worst case, which is really helpful to prepare for, what are the challenges that are inevitably going to come up, and kind of just like relying on history. Like we've seen it, the financial system has been around for a long time. And I know this is something that you guys do a really good job of, is just looking at what has the past already taught us about what's going to happen in the future and leveraging that. So I want to move to, this is another point that I had in the back of my mind earlier in the conversation I think is really important. And the word mindful has come up. And as we talk about emotions, belief systems, thoughts, a lot of us are blind to the way that we're being really tugged around by those things at any given time. And I think, mindfulness as a practice, one really basic way to look at it is it's a way of observing the emotions, thoughts, like really sitting with what's going on in your inner world. So I'm wondering could you explain a little bit about what mindfulness in finances looks like?
That's a great question. I almost want to start with what Zach said earlier, which is, when are we making what state of mind are we in when we're making decisions? So a lot of us make decisions from in a state of being emotional, right? Of anger or fear or whatever it might be, anxiety, right? And it's like, how do we separate a little bit? Because emotion is normal. We're all going to have it. But how do we create some separation between the rational and the irrational, which can often be very difficult, right? And cloudy, depending on what state of mind we're in or what's going on around us. So, even to your point about history, I'll go back and say, I think Mark Twain said it, but the quote might be a little off, was basically, history doesn't repeat itself, but it does rhyme, right? So what that means is we can look at history and say, here are the things that often happen. It's not going to happen the same way, but things will happen again, right? So how do we prepare ourselves for that? And how do we create and make decisions in a state of being somewhat as balanced as we can? And when we sit, and listen, meditation and mindfulness can be a lot for different things, for different people, and it's become somewhat of a cliche term. But in reality, it's really necessary for us to be able to sit and understand the way our mind is working to come to those decisions that we make. Because I think, there's a really great book that we love sharing called The Psychology of Money by Morgan Housel, right? And he talks about all the different ways that people act with money and, greed and how people take chances often beyond what their risk tolerance is or beyond what they even need to do.
Without
And
risk. sometimes.
Without even realizing it. Yeah. So I think when it comes to mindfulness, the one thing, actually, that's a great point. The one thing I would say that comes out of being mindful is actually just being more aware. So it's like looking at what you're doing and why, and what's driving that. It's not going to give you some, magical answer to things, right? It's just going to give you a better sense of like, how is my mind working, right? We might still struggle. We might still, kind of try to temper that, but at least you can start to see, it's scientifically shown that if it starts to create space between what we're feeling and what we're reacting, like that reaction. And I think that space, that little bit, can help us really just put things in perspective a little bit and not react immediately to things.
And I also want to add actually two quick things to that. I think it's part education and then part of planning for the worst case scenario, like what we were talking about before. I think, we always talk about how we follow PhDs and, our recommendations and our way of planning. And I think the education is so important because the more you're educated, the less scary it becomes, the less emotional you become, right? Because you understand it more. And I think on the other side of the coin of that is, planning for the worst and just being prepared, like Michael Phelps, like what you were saying. It almost creates like a muscle memory, right? So like if you find yourself in that situation, it's not hit the panic button, get emotional and make bad decisions. You're kind of building this muscle memory of it's like, mindfulness or meditation or, visualization, right? If you can visualize, what would I do in this scenario? What happens if fill in the blank occurs, right? By the time that actually does come to fruition, oh, I'm prepared. I don't need to get emotional. I don't need to panic. So all these exercises, all these mind games, they really are important, and sometimes, once again, when we are working with people, sometimes having them play with these different potential scenarios, I think it's important for a coach or a consultant to understand how the client would behave in these certain scenarios. But I think it's also important for for the client, for the person to start thinking differently, right? What if things don't go the way that I thought it was going to go?
So I'd be remiss if I didn't. We're definitely venturing over into my territory a little bit here on the coaching side of things. And
That's why I have you.
I wanted to flag a couple of things and then get over to maybe personal stories or practical applications that you have with clients here. But I know with clients and with myself, maybe different check engine lights, I like to call them, or signals that come up for us where we know we're in maybe a reactive mode and not rational and calm. Our skin temperature might get warmer. We might have a shortness of breath and notice that we're not breathing, have tunnel vision, right? So it feels like we're locked in on this one thing and we lose the ability to take multiple perspectives. So even mindfulness as a practice of just becoming aware of those things is really empowering. And just even making the commitment, I'm not going to make the choice in this place, can be really empowering and powerful. So
For an individual, and then also imagine a married couple. Wouldn't it
yes.
be valuable for them to understand the other or imagine a business with 4 owners. Wouldn't it be important for them to understand it? So it really starts, spider webbing and becoming bigger and bigger.
And to be able to identify your own cues and say, hey, like if it's your spouse or if it's business partners, can you look out for these things and be able to call them out? That is really helpful too. That's a really good point.
Yeah.
Well, I wanted to get to if either of you have personal examples of how you might use this philosophy of mindfulness or use this as a practice is there an example that comes to mind of a time where this was supportive for you, or you could use template examples? What are some of the impulsive emotional choices that people tend to default to? And what would an example be of a time where maybe mindfulness comes in, intercepts that from happening, gets them back on track, if that makes sense?
So one of I think a big theme that I wanted to hit on that we haven't touched yet is people, we are big on the education, right? We don't want to just tell people what to do. We want them to understand the why. And part of that comes down to having a legitimate collection of resources and different angles and having the right things to read. It's very easy to get trapped in what we would call the media matrix of I'm going to Google a bunch of things and I don't even know where to start. Reddit's telling me one thing. This person's telling me that there's all these things going on, and this is constant. People don't know where to start, what to look at. This person's telling them that. There's a lot of talking heads that have no experience with clients, have no experience with any of this stuff, and they're telling you things left and right like it's gospel. So we're not trying to be dogmatic, right? We obviously have the way we do things, and people trust it because of our approach, right? But yeah, I think when it comes to personal situations, maybe I'll go back again to the beginning where when I was working with people, as a passion, when I was doing this for years, it started with family and friends. I would kind of help here and there. Hey, I have familiarity with this. I can, talk to you about some stuff. And it kind of grew a little bit word of mouth where, someone's friend of friends said, oh, you help this person. Can you help me out too? Right. And that, what I saw was a lot of the same stuff. All of these people had advisors. And it was a lot of the same stuff of really investment advisors managing their money, but not so much educating them on financial planning, not really even touching things beyond just investments. So tax strategy, legacy, protection, cash flow, all these things we talk about, all of that was kind of ignored. And it was really just this uber narrow focus, tunnel vision, as you said, on investments, right? Because that's the water cooler. That's the sexy thing that people love talking about. But it's not what a financial plan, it's not the core of a financial plan. It's a big part, but not the core. So in a personal experience side, I'd say people taking a step back to really analyze, where do I feel like I don't have visibility? And I think when you work with a lot of different types of, there's a lot of investment advisors out there where people would come over and the theme was constantly, I don't know. I think I'm doing okay. It seems like it's making money because the market's going up, but I don't know if I'm being efficient. I don't know what I'm in. I don't know any strategy for my retirement. I don't have a distribution strategy. That's like a key thing that we see. Despite people having advisors, they don't understand how their retirement's going to look. And the lack of visibility, I think when people are mindful enough to say, I don't understand, like I don't actually know where I'm at right now, that's an important part to then say, I need to dive into this more deeply. And then they come to a team like ours, or they reach out to someone that they know has helped someone they know. So I think I would keep it there where I say, yeah, there's a lot of experiences we could go at, whether that's, specific situations we deal with or even our own emotions. But I think the biggest one is really looking at your own, financial ecosystem and thinking, do I have any comfort with this? Do I even understand it? Because if I don't understand it, I'm going to be scared of it. And if I'm scared of it, when things go haywire in the economy or even in my own life, when I have to deal with things, I'm not confident in my own plan. So then I'm more likely to start doing things that are, very reactionary, and very impulsive.
Zach Smith, you have something you want to add? I do have a curiosity to press in on a little bit more, if not.
I guess I'll just say very quickly how it's interesting. You've probably heard the saying before, and Mike, remember what you want to say, but you've probably heard the saying before, the only guarantees in life are death and taxes. We always joke that there's three guarantees: death, taxes, and retirement, because by choice, by age or death, everybody stops working. So that's why we talk about retirement somewhat often, in these conversations, because it's one of the very few universal items that everybody, is focusing on. Retirement means different things for different people nowadays, but still everybody kind of has that goal where, they want to get to the point where they have the ability to retire. That's still kind of a universal goal from everybody. So, it's just interesting how everybody has this universal goal of getting to the point where they have the ability to retire. And when we ask people the question of what's your retirement strategy, right? So like every generation before us, every generation after us, you would think people would have a good answer for this. You would think people, even other advisors in our industry, you would think that people would have figured this out by now since it is so important, right? We know that the 4% rule doesn't really work anymore. The person who created the 4% rule, his name's slipping my mind, he created it in the 90s, and he actually was interviewed in May of 2022 saying it doesn't work anymore. Stop doing it. Everybody needs to stop doing it, but people continue to do it. So, it's just interesting how when we ask people, what is your retirement strategy? We know it's important to you. The number one answer that we get, if it's not a business owner, because it might be selling the business, but the number one answer we get is their 401k, their qualified plan. And we then have to educate them on the difference between a retirement account and a distribution strategy. So I just think it's really challenging. I think some people don't even know what questions to ask. And talking about tunnel vision, like you said, just following the masses and following the herd, it can really be challenging to break out of that media matrix that Zach was referring to. So that's why, I think I've said this in every episode that we've recorded so far. I just commend everybody who's listening to this episode and to those, education seekers and the people who are reading books and they want to learn more and intuitively understand the system is broken. Just keep doing what you're doing, because most people, they don't even know the right questions to ask. So, that's kind of a hard, it's an 8 ball that's hard to get around.
And just to sprinkle on top of that, Mike, please don't forget what you were going to ask. But it's kind of like you don't know what you don't know. So how can you expect to know until we dig deep? But the other part is, back in the day, they used to have pensions for people, right? And then it switched to 401ks. And again, 401ks are great, but they have their purpose, right? But the idea is it shifted from a place of guaranteed income for people who were going to retire. And that was probably more at a time when people stayed at one company for most of their career. So it's just a total, shift. But now it ends up in a place where that 401k doesn't have the same type of consistent guarantee as the pension would. So people have to shift the way they even think about that. And it puts people in a little bit of a different type of, predicament, right? Where it comes into that volatility starts to come into play as opposed to a pension. So it's like, how do we strategize around that and create a different type of environment that can withstand that?
Yeah. And I also find, this really is 2 seconds, Mike. I also find that because pensions are gone, because times are so different, and we can even see like a hockey stick curve of how much things are changing and how quickly and rapidly things are changing moving into the future, it's also challenging to, lean on your parents or the last generation to say, how did you do it? It's a totally different ballgame at this point. So we need to re-educate ourselves to figure out what the best strategies are today.
So, I mean, for the record, first of all, I love your guys' dynamic, and I feel like I'm here to guide, but this is your guys' show. You guys are the experts. So I think it's awesome that you guys are able to riff off of each other. So my
You should
question, my
see us at dinner
curiosity,
with our families, though. Nobody gets a word in besides the 2 of us.
well, that must be frustrating for the ladies and the kids, but that's maybe a conversation for another day. Well, so my question evolved a little bit as you guys were talking, because what my original curiosity, there have been multiple times where it's been highlighted that sometimes people don't know what they don't know. We don't know the questions to ask. And so education is something that's really important, and maybe understanding what are the questions that I ought to be asking is a helpful way to look at it. And actually, I think that is a helpful way to just like, what are some simple, let me backtrack a little bit, actually. I think that a lot, and I've been in this seat before, a lot of people who are listening to this might go, this is a lot of information and a lot of things that I know could be helpful, but feels really overwhelming for me. And I know that the first step is usually the hardest step, which is to just show someone, hey, this is truly where I'm at. I'm willing to take the honest look. This is where I'm at. So what would you, this is where I really wanted to go. I'm glad I caught myself. What would you say to the person who is in that place? They're like, I'm maybe even they're in debt, they're not making a lot of money, the negative cash flow, right? Like they're maybe starting behind the 8 ball. What would you say to this person? And maybe we can keep it to a stoic lens here? What would you say to this person?
Yeah, that person, which there's a lot of those people, and I think a lot of us end up in that situation for a variety of reasons, right? And a lot of it comes down to, again, systems. So we want to start from a place. Let's go with the debt conversation, because I think that's a really important one, and it's a one a lot of people find themselves in for a variety of reasons. And the way to start with that really sticks to the same framework of, let's change your cash flow, right? Let's switch that system up. This isn't about reducing your life or changing things dramatically. It's about creating systems from the ground up to save your paycheck better, right? And there's a lot of ways we do that, and there's a system we really work with there to pay ourselves first, so to speak, so that increases over time do not get blended in. They actually start to separate, and there's a gap between our increases and our saving, right? Our saving is going in line with our increases, and it's not just blending together. Because most of the time when people get increases, they go on the vacation, they get the couch, and it's gone, and they don't even know where it went. And so the idea is we start from a place of one. As we normally do, let's build a cash flow system. That's one. Two is, and I think this is where, again, it sounds very simple, but when you really talk to people, you understand that sometimes they can't see the whole picture at once. You said it with the tunnel vision, right? And it's not their fault. It's just the way life works, and it kind of pulls us in these different directions. But, sometimes when it comes to debt, someone, for example, can have, a lot of credit card debt or student loan debt, or, and I wouldn't put those in the same bucket, because student loan debt can often have a lot lower interest rates, whereas credit card interest rates are 20+%. I mean, they're very high. So the idea for us is, how do we almost take an arbitrage view and think, where can we get the best returns on our money? And in exactly as we talked about before, reverse engineer that up. So if I have a lot of credit card debt, and at the same time I have an investment account, a taxable investment account, sometimes they can't see that getting the percent that they're getting in the market is not worth more than them paying towards the debt, right? So again, it's a very simple example, but
An interest rate game.
Yeah, it's an interest rate game. So it's where we want to, the cash flow is obviously the first step, but the second step really is looking at their whole, we build out balance sheets with people, right? And when they can see everything they have in one place, there's real benefit to that. I think most people are in a place where they don't even know what they have, right? Like, they don't know where things sit. They got 401ks sitting over there from old jobs. They got savings accounts they've forgotten about. They've got, it might be not that dramatic sometimes, but the idea is, if we can organize things in one place on a balance sheet, and then we can work through strategy in a prioritized way, even just seeing that clearly, which really fits into stoicism of seeing things and controlling things, because I'm definitely a visual learner. Just seeing things in one place helps us really break things down and change the way people feel about it. I think stress drives us away from making decisions. And so if they can see things clearly, there's this removal of a layer of stress, and then we can start to kind of chop off things that need to be done, speaking specifically about debt.
And I'll even just add, I think that's one of the many pieces on why it's so important to work with a coach. So I'm going to throw a total curveball here and move away from finances to share something that actually happened in my own life. Is when my wife was pregnant with our daughter. We've never gone through that before. We didn't know what to expect, right? We never were parents before. We never went through a pregnancy before. And we actually hired a coach. We were part of this group, and we got together. I think it was maybe over an 8-week period every Wednesday night. But the reason that I'm mentioning that is it was so valuable for us, not only to get the education, to Zach's point, if you feel stress and it's something that you're not happy with or you're not proud of, it's very common to brush it off, or, I'll get to it next month, and it turns into 2 years, right? So the fact that we hired a coach, it was also accountability for us. So we knew, I can't remember the exact time, it was 6 or 6:30 on Wednesdays. We stopped what we were doing. We put our phones away. We sat down together, And it was like 1 to 2 hours of focusing on this for 8 weeks. And by the time the 8 week period was over, we were like different people. So that's just one example. Obviously, fitness or, fill in the blank, finances definitely. But I think that's the importance of holding ourselves accountable and working with coaches. And just like anything else worthwhile, you're not going to see the results after one day. So it's something that you do have to continuously show up for. It's something that you need to have, discipline and mental strength for, because it's not easy. And sometimes it's not fun. If it was easy, everybody would do it. So I just wanted to say that, though, because I know that having accountability partners in my life, I mean, it's one of the most valuable things in my life. So that's, I guess, the one thing I would share with everybody is hold yourself accountable. And it's a lot easier to do it if you have a partner.
And that's also, just to fit it back into the stoicism thread here, that's a
you're
good,
gonna do this.
Bring us back.
yeah, that's a big part of it too, is surround yourself with the right community. And so that, I think making sure that, you kind of are surrounding yourself with a team that can help you become the champion before you win the championship. I'm a Mets fan, so I'm going to hate to use this, but I'm going to do it for Zach. When Aaron Judge wins the MVP, he doesn't fire his coaches, he hires more coaches. So I think asking for help is a superpower that we have that we don't use enough. So if you can add, having the support, why make it harder? Like if it's an area where you can have support and comfort, it's that's really something that's underestimated. I think for people wanting to sometimes, want to take on the challenge themselves, which I am all for. But it's like, how do you do that appropriately? How do you do that the right way? And you can do that with a team.
And sometimes it takes putting your pride aside.
It does. I was just going to interject that there's with finances, there's a lot of times there's shame with, oh my God, I'm in debt and I can't believe that I'm going to reveal this to another person. And I think it's an important message to say, start where you start. Now I've been there. I've earned pretty good money my whole earning career, and I've lived paycheck to paycheck for about half of it. The first half of my career, I didn't have any strategy, so I was just spending. My checking account was truly a spending account. I was really using it that way. Anytime I got a raise, what can I'll do a better gym membership. I'm going to get better rent, not better rent, higher rent, better apartment. So yeah, I think invitation here is just start where you start. And I know what it is to have that shame, but there's the slow and steady approach, the consistent approach over time. You wake up one day and go, wow, I can't believe that I've made all this progress from where I was a few years ago. So is there anything, either Zach, that we haven't covered so far? I know we're pushing on time boundary here. So is there anything we haven't covered so far that you would like to bring into the conversation now?
I'll just add to what you just said, Mike, and, enjoy the climb, enjoy the journey. Like, it feels better when you get to the top of the mountain when it is a hard climb. If it's easy, I think you almost lose an appreciation for it. So I think all different people struggle in all different ways in all different areas of life. And for those who are maybe fighting through something right now, whether it's finances or not, just enjoy the journey and kind of understand and think about how when you get to the top of the mountain and you look down, it's going to taste that much sweeter,
Yeah, I love that. Let's also make sure we have enough resources to get down from the mountain, right? So that's part of the planning aspect, which is, I mean, people think of finances and are different than or it's just different. It's all a mindset of life. I think one thing I might recommend is just to lean into the stoicism. Meditations by Marcus Aurelius is gold. Discourses by Epictetus was another one. And then the one that I sent you guys, the Book of Life by Krishnamurti, is another interesting one. Again, all of these are, it's not looking for an answer to things. It's just like a shaping of your mind and the way you think about things. I think we all struggle with this. That's why it's so easy to give advice and feedback on it, because we all struggle with it. which is how do we get to a place where we don't suffer on things we can't control, right? We lean into the things we can control, and we build things appropriately around that. And it can be done, right? It's just having the right mindset to want to do that.
And if you're busy, schedule it in.
Yes.
I mean, if I don't schedule things in, they don't happen. So
Yeah,
It's not a
willpower
mentality,
doesn't
it's not
carry us.
real. Yes.
Yeah.
Well, Zach, the final question that we ask on this show and every single interview, before we wrap here, what does it mean to you to be wealthy?
That's a great question. Never having to make a choice based on money.
And if you could channel your inner Marcus Aurelius, what do you imagine Marcus Aurelius would say to this question?
Knowing you did everything to be able to control, knowing everything you did in your control to make a resilient plan.
Love that. All right, guys. Well, it's a wrap. I appreciated our jam together. I love the dynamic that the three of us have. It's been a while since we all connected this way. So it was a treat to be able to share this on this podcast. And Zach Smith, you've got a gift for those parting words, man. So I really loved the invitation to enjoy the climb. That's where all the fruit really is, enjoying the climb, and also prepare for the way down from the climb, as Pumerantz mentioned at the end there. So thank you all for listening. And as Zack Smith has echoed in the first 4 episodes, it shows something about you as a person that you're taking time to educate yourself and listen to these types of conversations. So thanks for being here. That's already a big win for you for spending this past hour with us and learning a thing or 2 or 10 about stoicism and finances. And until next time, thanks for listening.
take care, everybody.
Thanks. Take care.
Hi, everybody. This is Zack Smith, co-founder and CEO of I Am Financial and the co-host of The Other Side of the Coin. Please remember to subscribe and like. And if you have any questions and or would like to speak, please feel free to email me directly at zacksmith@im-financial.com. That is ZAK Smith at the letter I, the letter M-financial.com. Reach out to us and we will make certain to get you to the appropriate channels. Thank you again, and we hope you enjoyed our show. See you next time. Disclosures. This podcast is for informational purpose only and is not to be construed as tax, legal, or investment advice. Although the information has been gathered from sources believed to be reliable, please note that individual situations can vary. Therefore, the information should be relied upon only when coordinated with individual professional advice. Guest speakers and the firms are not affiliated with or endorsed by Park Avenue Securities, Guardian, Northeast Financial Network, and I Am Financial, and the opinions stated are their own. Guardian, its subsidiaries, agents, and employees do not provide tax, legal, or accounting advice. Consult your tax, legal, and accounting professional regarding your individual situation. All investments and investment strategies contain risk and may lose value. Zachary Pumerantz, registered representative and financial advisor of Park Avenue Securities, LLC, Park Avenue Securities, OSJ, 101 Crawfords Corner Road, Suite 2405, Homedale, New Jersey, 07733, phone number 908-709-0020. Securities products and advisory services offered through Park Avenue Securities, member of FINRA SIPC, financial representative of the Guardian Life Insurance Company of America, New York, New York. Park Avenue Securities is a wholly owned subsidiary of Guardian. I Am Financial is not an affiliate or subsidiary of Park Avenue Securities or Guardian. Arkansas Insurance License Number 20876-403. California Insurance License Number 4355137. Podcast submission number 8538242.1. Expiration 1127. OSJ address is 101 Crawfords Corner Road, Suite 2405 in Homedale, New Jersey, 07733. Their phone number is 908-709-0020. Our phone number is 914-603-8325. A member of the Northeast Financial Network, financial representative with Guardian Life Insurance Company of America, New York, New York. I Am Financial and Northeast Financial Network
are not affiliates or subsidiaries of Guardian. Arkansas license number 163038838, California license number 4108463.